All right, in today's episode, we'll be talking about how markets reach all-time highs during what everybody thought was going to be the most turbulent time in the U.S. economy. Donald Trump is U.S. president, inaugurating the start of Trumpland. We are also talking about the things that we learn in the markets, the things that we're going to plan, and the things that we're going to be doing next year with the podcast and with our companies. So first things first. Welcome, Dad.
Thank you.
Nice
to be here.
Very good, very good. Well, we have 3 whiskeys in front of you. We're going to be debuting in, I would say, another episode of Scotch and Stock, so welcome. But we have the Famous Grove, we have Ben Bracken, and then we have our old loyal black label, Squid Game edition. We're going to debut it as time goes by and represent a little bit of the year. So let's start with a little bit of the cheers. Grab the first one.
So which one is this one? This one is
going to be the Famous Growth. We're going to start easy.
Yeah.
And then chins. And now we taste. It's solid. Could it be improved with the water? Maybe. But it's a solid choice. But okay, so starting first, what was the personal highlights that you had this year?
I would say that, as you know, we are having a portfolio with 3 friends. We call that the G4, and I think we are very, very pleased with the portfolio performance this year. So we have the fortune to double the portfolio this year, which is a real blessing.
Well, usually it takes 7 years in an S&P 500 index at 10% returns a year to double. So doubling in a whole year, it's pretty fantastic returns, to say the least.
No, it is. But of course, we took a very high risk with that one because the portfolio is 100% NVIDIA. So we take our chances with NVIDIA, and it pays us very well.
So you're saying, so you don't have a portfolio, you have a single stock?
No, we have a portfolio, but we have only one pocket.
Fair enough. Well, for us, it was very, very good as well. The S&P 500 is returning 20%. I think our overall portfolio is upwards of 30%. And our active trading portfolio, which is the one we manage, was sitting at 50% just before the drop. Now, today is Monday the 23rd, just before Christmas Eve, and the market has decided to bounce back from the recent correction that we just had.
Yeah.
Which is fantastic because now we're sitting potentially at 50% returns and upwards, which is, a fantastic year. But yes,
we suffered a little bit on that one because I have to make a correction about what I say before. Yes, we doubled the portfolio. We just put our portfolio 100% on top of our investment, but we have a little bit of, step back on the portfolio because of the current situation with NVIDIA. So NVIDIA, for the past, I would say, 3 weeks has been having a quite volatile time. So I would say that our portfolio right now, we hit the 100% growth, but right now I would say we are 80%. I would say a little bit more maybe. I would say 85% on the portfolio because of the 3 weeks performance of NVIDIA, the past 3 weeks performance.
Well, I want to say in terms of the podcast, one thing that I wanted to mention was we are almost at 300 subscribers, which is pretty nuts. We are with
you mean
for YouTube?
For YouTube,
it's Scotch and Stock. Yeah. We are also working with a couple of partners,
which is very good. The last time I checked that online, you were having only
like 200.
No, less than that. But I checked that one at the beginning of the year. Yeah. I see the number, but I checked that during that time was around 15. At the beginning of the year.
So we're doing better on YouTube than on the stock market, is what we're trying to say here.
Not in my case,
but
because as I mentioned to you,
it's growth. But yes, okay. So that's also, and we're also doing I'm doing also another podcast, The Market Boss, with a couple of other friends. Went to the eToro conference as well. That was very good, very eye-opening.
Yeah,
And
I saw part of that one. You made some
good at
sharing, during your time with the eToro people in London. No, I think it was around
correct.
London.
Yeah.
That was
in
really
London.
nice.
I say, on the outskirts of London, but yeah, London.
Yeah,
Cool. Okay, so now we're gonna go into the second one.
I think the people call that one the Great London.
Yes.
Yeah.
Yeah. So now we go into the second one.
Yeah.
Make it simple and easy. So this is Ben Bracken. You're gonna go in the middle.
Release the Bracken.
Release the Bracken. So in this section, what I want to touch on is pretty much like the good thing, the bad things. Like we tend to do in many of our trips, the good, the bad. What was the good things? I want us to mention the same thing for our years. So for you, what was first, cheers. This one is smoother.
Yeah,
a little bit more hard.
Indeed.
Yes.
I would say that the first one is a very stable one. I will say that the first one is something like a very stable ETF. I would say SPY, something like that. The second one is a little bit, I would say, not weak. I would say that one, low expectations.
So like a fiber.
I would say something like that. We are not expecting too much, like solar energy. I would say that one.
Fair. Okay. I like that. Okay. So what was the good thing and the bad thing?
Okay, we are supposed to take this one as what has not been so good. I would say that of course, we're talking about the market only, no?
Up to you.
Okay.
Up to you. It's an end of year reflection, so it's up to you to tell us.
I prefer to continue talking about the market in this particular case. Related to the market, the thing that I will say that has not been working as well as I would like to is the level of investment. So I'm still considering that the level of investment, personally speaking, that I have in this moment should be a little bit more intense by this time. But of course, I have to take into consideration what is happening, family-wise, and I would say that is something that could be done better for next year.
Okay. And what was a good thing?
The good thing I will say that is the fact that there's another portfolio that indeed is one that is supposed to be, indeed it is in my radar. Is related to my ISAs in UK, which I will say that it's also a very high risk one because it's only NVIDIA, that one. So that one is something small, but I would say that very stable.
Well, very stable and very leveragey.
Yeah. But in this particular case, the risk is paying off.
For sure.
That is the best thing. So definitely, I would say that taking some additional risk sometimes is good. So in this particular case, the risk we are taking is paying off. It's something similar to the portfolio with my friends, but in this particular case, it's more satisfying because this is one that we are sharing. So sharing with my son is giving a little bit of more satisfaction.
It's the truth.
Yeah.
No, it's true. And you're managing it too.
Yeah.
Which you're taking your hits, and it hurts. It hurts,
Yeah, but of course, I'm listening always, what your recommendations are. So I will say cheers for that.
Chin chin. For me, it's the developing. Slowly we're getting a lot more content out. We're being in the markets, and my conviction has grown too, because a lot of in the stock market, when you go into stock picking and not investing, because I wouldn't say this year I invested obviously because I think it's super important, but I also try to be super active and try to actually beat the markets in many sense. And I think I did somewhat, but whenever I had the feeling I needed to, really take a bite into that trade, I didn't do so because I was scared. My position sizing was something that I was working on. So maybe I've developed that sort of like confidence in the markets, and but obviously the markets have been going up like crazy, so everybody's making money. But That's one thing that I wanted to continue to improve is understanding because being a trader is a lot of mental. You're battling against yourself. You're not battling really against the market or other people. It's yourself. So it's starting to trust your conviction and all of that. Now, the good thing is, we definitely got on many more projects. We're tackling new assets. We're tackling new projects, new podcasts, new connections, new people, and definitely got to meet.
We are exploring a little bit more about real estate as well.
Correct.
So we have a new property. I didn't mention that one before because this is more on the side of the
family,
things. But I will say that also, some learners are coming from that area. So something that can be, explore a little bit more in future.
Yeah, this is something I want to share with everybody. This podcast is sponsored by ourselves. If you're interested in talking about your finances, and I know that many of your friends have never touched a stock other than Shell stock, if any of your friends want to potentially give us a call, sit down with us.
And that is not because of investment, it's because of legacy. It's something that we just receive because of our time.
Exactly.
With Shell.
Exactly. But many people don't realize. So let me ask you this: do you think investing in stocks is something that is important?
That is something that I would say that if I have only one thing to reconsider, from the past that we maybe been something making a big difference. Of course, and I'm still not talking about the personal thing. I'm just talking about finance, just, talking about business and money.
Yes.
If you are working so hard to get money and to produce money, you should be working even harder to take care of that money and make sure that the money is doing what it is supposed to do.
And work for you.
And the money is not supposed to be something that you are getting that one and putting that in a closet. That is clothes.
Yeah, correct.
That are the things that you are supposed to be in a closet. So this is something that I learned close to my retiring time. Not really. I did some investment, but I would say that my investment at the beginning was I would say was a kind of passive investment. So I have been doing investment using other people's. No, I would say that the key difference is when you are active in that one and you start doing your own investment and you understand where your money is going.
Yeah, that's the thing. Many people spend all of their time trying to acquire money, but they don't know what money is and how to make the most of it. Money is only for transactioning. You need to buy assets and products and other things that allow you to live your life, create more wealth, create a legacy.
I learned a lesson at the end of my professional career. I was investing, so let's say, in my total time. After the moment, of course, I start a family and start working. I would say that I spend more than 50% working. And of course, a little bit less, because I have to say, my focus was my work in order to provide for my family. And then I spend, so I would say, 45% with my family. And 5% about what to do with the money. It's a huge mistake. I should be reducing a little bit more the time working and understanding what is going on with my money. So I would say that the proper ratio will be 60, 20, 20. So 60 for the family. If you cannot do it, at least 50% with the family, but you need to allocate money about what to do for your future, because the problem with the future is you never know when it's going to knock your door.
Yeah, and we definitely know about that, Because, for those who don't know, my mom is going through cancer, and thank God my dad did what he had to do in order to put us in a solid position, because it hits you in the face and it hits you quick.
Yeah, and you never know when it's going to happen.
Exactly. No, it's the truth. Okay, so now we're going into the last whiskey. And I call this one the apple of whiskey, because it's branding and it's solid, but it's not the best.
It is. It is a good one, but it's not the best. But definitely it's a good one. By the way, I tested that before.
So let me ask you. So let's work on predictions. We get paid to make predictions. So what is your prediction for returns next year? You know, and we obviously this can vary. Don't take this as advice, you know. But what do we expect? Yeah. What are you expecting with Nvidia? I guess in this case, or the stock market in general, if you want.
No, I have to say that I still, expecting quite a strong performance from Nvidia. We are not slowing down with Nvidia. Not for the end of the year. I would say that Nvidia is going to be quite strong in Q1 next year. I'm expecting something good coming from the U.S.
Trumponomics?
I would say I'm not a fan of Trump as a person, but I'm really a fan of Trump as a strong person. And I would say that he definitely demonstrates that he is a very strong person. That can go north or south. It's going to be depending not only in Trump, it's going to be depending on whether the people is willing to accept what is going to do, etc. But in terms of I would say, in terms of finance, I would say that can be good. And I hope that part of the good is going to be happening in Venezuela as well. Coming from Trump is starting well, so I'm expecting something better. But I would say that next year, especially Q1 and part of Q2, is going to be good for people to take some risk, some additional risk, and that may pay off by the end of the year.
I think, January might be ugly because I'm expecting buy the rumor, sell the news when it comes to Trump, because then we realize exactly what's going to be happening with him. But I think the market overall, I'm expecting no less than 10% returns year on year, right? Like S&P at least.
I would say 10% is a very conservative one.
Yes, I agree for sure. Like at least, right? Like the thing is like I don't see a recession in the horizon.
I'm not recommending everyone to take high risk, of course, but definitely an associated risk that implies more than 10%. Definitely something that you have to do, especially if you are young, if you are starting, because at the moment that you start doing those kind of decisions, risky decisions, at the beginning, you have the opportunity for learning in a longer time. Something that people at my age doesn't have. But definitely, if you are young, take risk, make mistakes, learn, and doing better.
Yeah. And then you let your knowledge compound too,
Oh yeah.
Because that was one thing that we were talking about. If your gains compound, you also have to let risk compound, because there's bigger positions now. There's, it's like if you grow your portfolio, now you have more money. You have to make more decisions. Take better action, and you don't get good at it unless you're doing it. This is something where practice comes. Which is the reason I'm so happy you're doing your own portfolio, by the way.
No.
Cheers.
It is true. Don't forget one thing. Making money is not important. What is important is what you do with the money.
Exactly.
Okay, so
money is just paper.
But what you do with the money is the real thing that is important. So make the money and then make good decisions. Yeah. Make decisions for the family, and also why not for other people.
Let me ask you this. And obviously now you're made it this far into the episode, subscribe. Hit the like button, it's free, and maybe we'll make you some money. But
I'm quite lazy on that one, but I can tell you, you have a lot of people if you do it.
Yeah. So what do you think? So 2025 was the year of what, in your opinion? I can tell you my opinion. My opinion is 2025 was not the year of AI, but the year of chips and infrastructure. I think that 2024 was the year of chips. 2025 is going to be the year of AI, where we're going to look at software, Palantir, Microsoft, Apple, how they are going to start implementing and start taking profits from whatever they're building right now.
Yeah, but that is something that you need to take into consideration. AI can be good, and definitely I am expecting important growth on all the areas associated to AI. But don't forget one thing: AI is just so let's say is technology. Technology is going to support something like vapor. When the vapor started to be the new technology, all the industries associated to that new technology grow and flourish. So it's going to be the same. So don't make the focus only on AI. So think about what AI can improve, what AI can help, and start, distributing money in that area. So
Yeah.
So don't concentrate it only on. It's important, of course, in technology, but think about it. Who's going to be the winner the most with that technology?
Yeah.
And put some money there.
Exactly. Maybe in Tesla, maybe Palantir, maybe
it can be many.
Maybe Sound.
SpaceX.
SpaceX.
I don't know,
Mr. Musk.
Mr. Musk say nothing, but you never know when that company is going to be public.
Yeah.
They say no, but you never know.
It's the truth. The problem with SpaceX is they have so much U.S. knowledge. Like they are so techy, it's America is the biggest.
No, dude, you are talking about now a guy which is a special advisor of Mr. President, so anything can happen.
He's the advisor of Trump land.
Oh yeah.
The truth. Okay, I think we've done it. I think that's good.
No,
Thanks so much.
Yeah.
Thanks so much for watching, and keep posted on more episodes. We're gonna be working on getting you more content out for next year for sure.
Definitely.
I'm definitely trying to get,
Yeah.
Make sure you join the live streams also, because we're going to be, I do the live streams, but we've made money. I've also lost money. The last one, I'm so glad nobody tuned into the last one because I lost 10K.
Yeah. and tomorrow is Christmas, and please, take the spirit.
Yes. Enjoy the
Merry Christmas to everybody.
Merry Christmas, guys.
And 1 week after that one, we will have a new year. So
I think this is the last episode of Scotch and Stocks for the remainder of the year.
Maybe. You never know. You never say the last one. This is the one before the last.
Exactly. And, it's nice that this starts because I like the 001 at the end because it's the start of the new year too, As things come to an end, many others come to a start. So
it's a quick game. Maybe we're going to be the winner.
All right. Cheers.
Cheers.